Click the bell icon to get latest videos from Ekeeda.
Hello friends, myself Professor Uday Bhokre, and now I am welcoming you on your own YouTube channel Ekeeda. Hope you are watching my videos regularly and getting benefit from that. Friends, if you are watching my video at all for first time, please subscribe to our channel Ekeeda and also press bell icon for your latest notifications. Today we are going to learn for CA Inter course Advanced Accountancy, topic name Internal Reconstruction, question number 7, which is on your screen. Let's see the question. The summarized balance sheet of Revise Limited as at 31st March 20x1 was as follows. Authorized and subscribed capital 10,000 equity shares of 100 each fully paid. Unsecured loan include 12% debenture, accrued interest on that. Current liabilities include trade payable and tax provision. Fixed asset include machinery. Current assets include inventory, trade receivable, bank and P&L account debit balance, which is a loss for you. It was decided to reconstruct the company, for which the necessary resolution was passed and sanctions were obtained from the appropriate authorities. Accordingly, it was decided that each share shall be subdivided into 10 fully paid up equity shares of rupees 10 each. So your existing share is of rupees 100. Now it is divided or subdivided in 10 shares of rupees 10 each. Means there is no profit or loss, but there is a changes in the face value of the share. Earlier there were 10,000 shares of 100 each. In future there will be 1 lakh shares of rupees 10 each. In that way capital will remain 10 lakhs. Let's see the next information. After subdivision, each shareholder shall surrender to the company 50% of his holding. We have decided earlier there will be 1 lakh shares of 10 each. Of that 50% they will surrender for the purpose of reissue to the debenture holder and trade payable. That means they want that you settle your liabilities, that is debenture holder and trade payable. That means these shares can be issued only to these two parties. If it is not issued, it can be cancelled. Out of surrendered shares, 10,000 shares of 10 each shall be converted into 12% preference shares of 10 each fully paid. Friends, when you convert your existing equity shares which were surrendered into preference shares for which there is no entry, it is merely a memorandum information for our knowledge. The claims of debenture holder shall be reduced by 75%. In consideration of the reduction, they are saying they will reduce their claim by how much percent? 75%. That means that amount will go to the capital reduction account. But in place of that, in consideration of that, what they want, the debenture holder shall receive preference shares of rupees 1 lakh, which are converted out of the shares surrendered. So we are giving them preference shares of rupees 1 lakh to settle our debenture holder out of surrendered shares. Trade payable claim shall be reduced to 50%. They are saying trade payables claim shall be reduced to 50%, means it is reduced by 50%. It is to be settled by issue of equity shares of rupees 10 each out of shares surrender, and that after reduction, whatever reduction they are doing, in consideration of that we are giving them shares which were already surrendered. Balance of the P&L account is to be written off. It is your basic adjustment. Shares surrendered not reissued shall be cancelled. तो जो शेयर सरेंडर हुआ है लेकिन यूज नहीं हुआ है will be cancelled, that is they are transferred to capital reduction account. You are required to show the journal entries giving the effect to the above and the resultant balance sheet. So they are asking you to prepare a journal and they also want from you a balance sheet. Friends, firstly I need to prepare a journal. Let us prepare the format of journal. Friends, I am ready with the journal and now we are passing entries for all the transactions which are given to you. Let us pass those entries. A. Each share shall be subdivided into 10 fully paid up equity shares of rupees 10 each. So out of these shares, they are subdivided. So I will say old account debit to new account. There is no capital reduction account here. Only there will be a change in the number of shares. Friends, you can notice I have recorded the entry. Equity share capital rupees 100 account debit. Earlier there were 10,000 shares of 100 each. Amount debited is 10 lakhs. 2 equity shares of rupees 10 each. These are the new shares. They are divided. Earlier they were 10,000. Now they are 1 lakh in number and now face value will be 10. 2 equity share capital of rupees 10 account Once again, amount is rupees 10 lakhs. Our narration is being equity shares of 100 each subdivided into shares of rupees 10 each. Simple narration. So what happened here? There is no profit or loss, but number of shares have increased from 10,000 to 1 lakh. Let us see the next transaction. Transaction number B. After subdivision, each shareholder shall surrender to the company 50% of his holding. Now your existing 10,000 shares are converted into 1 lakh shares. Out of that 50,000, 50%, that is 50,000 is surrendered to the company for the purpose of reissue to the debenture holder and trade payable as necessary. So they are saying that they will surrender, and these shares were used to settle our liabilities towards debenture holders and trade payable. Let us pass the entry for surrendering 50% of their holding. Your entry will be equity share capital rupees 10 account debit to share surrender account. Let us record the entry. Friends, you can notice our entry: equity share capital rupees 10 account debit to share surrender. 50,000 shares they have surrendered to you. Amount is of course 5 lakhs. To share surrender account being 50% of equity shares surrendered. So simple entry we have recorded. Let us see what happened next. Out of surrendered shares, 10,000 shares of rupees 10 each shall be converted into 12% preference shares of 10 each. For this we will not record any entry. It is merely an information. We will not record the entry for this. Means now when we reissue those shares as a preference shares, we will directly credit preference share capital. For now there will not be any entry. Let us see the next transaction. Claims of debenture holders shall be reduced by 75%. In consideration of the reduction, debenture holders shall receive preference shares of rupees 1 lakh, that is 10,000 preference shares of 10 each, which were converted out of shares surrendered. So we have to reduce our debenture holders, and in cancellation of that we will give them preference shares which were surrendered by equity shareholder earlier. Let us pass the entry for reduction of debenture holder. Friends, you can notice our entry: 12% debentures account debit, 2 lakhs multiply by 75%. What is 2 lakhs? It is their principal amount. Importantly, along with that we will also cancel their interest of 75%. We will pass the one more entry to capital reduction account, which is a benefit to the company. Amount is 1,50,000. Being 75% of the debentures are cancelled. See, they are saying debenture holders total claim is to be reduced by 75%. So their accrued interest also will be cancelled accordingly. Let us see what is the amount of accrued interest. The accrued interest of debenture holder is 24,000. Of that 75% comes to 18,000. Right, so your entry will be accrued interest account debit to capital reduction account to the extent of 18,000. So let us record the entry. Friends, our entry is accrued interest account debit to capital reduction. As I discussed, 24,000 ka 75% comes to 18,000. Now they are saying in cancellation of this they want preference shares out of surrendered. So my entry will be surrendered shares or share surrender account debit to preference share capital account. Let us record the next entry. You can notice the entry: share surrender account debit to 12% preference shares account. Rather, it should be 12% preference share capital account. Right? Being preference shares out of surrendered shares allotted to the debenture holder, amount is 1 lakh, and in that 1 lakh amount, how much preference shares, how many preference shares are given? 10,000 into 10. Being preference shares out of surrendered shares allotted to the debenture holder. It is a simple entry we have recorded. Let's see the next entry. Next adjustment is E. Trade payables claim shall be reduced to 50%. So their claim is reduced to 50%, and it is to be settled by issue of equity shares of 10 each out of the shares surrendered. So it is settled by issue of shares which were already surrendered. What is the interpretation of this? They are saying trade payables claim shall be reduced to 50% and it is to be settled. That means they are settled fully. Means in short, in return to their entire amount due, we are just giving them equity shares which were already surrendered. So entire trade payable will be cancelled and they will be transferred to capital reduction account, and in place of that we will give them fresh shares. Let us record the entry. Friends, so our entry is trade payable account debit to capital reduction, entire 72,000. See, their language is very confusing. They were saying 50% is cancelled and it is settled, means remaining is also settled. So entire trade payables are cancelled and we are giving them surrendered shares. And friends, surrendered shares will be given to the extent of 50% of this, that is 36,000. So our entry will be share surrender account debit to equity share capital account. You can notice our entry share surrender account debit to equity share capital account. These are the new shares, but they are issued out of surrendered shares. 3600 shares of 10 each, being 3600 equity shares, surrendered equity shares issued to trade payable. So we are issuing these shares to the trade payable, and trade payable were already cancelled. Let us see the next transaction. Balance of the profit and loss account is to be written off. Now before I do that write off, I need to firstly see how much amount is there in my share surrender account which is not utilized. That will be transferred to capital reduction account. Friends, you can notice share surrendered amount was 5 lakhs. Out of that we have reissued some of the shares. We have reissued 1 lakh worth of the shares to the debenture holder and 36,000 worth of the shares to the trade payable. So remaining shares we have to cancel and we have to transfer to the capital reduction account. What will be the amount? 5 lakhs minus 1 lakh minus 36,000. The amount is 3,64,000. Our entry will be share surrender account debit to capital reduction. Friends, you can notice our entry share surrender account debit to capital reduction account, being unutilized balance of surrendered shares transferred to capital reduction. In this way, we have closed our share surrender account. Now we have to write off debit balance of P&L account, and then we will check if there is any surplus available that will be transferred to capital reserve. Firstly, before I proceed further, I like to prepare capital reduction account in a working note so that we will find out the difference, and with that difference first we will set up our PL account and remaining amount we will transfer to capital reserve. Let us prepare capital reduction account in working note. Friends, you can notice I have credited all those amounts which are credited in this account in our journal entry. Then I come to know that this is the balance available with us. With that balance, first and foremost, I will write off our debit balance of PN account which was 6 lakhs. Still there is a surplus which we will transfer to capital reserve. So we need to pass our last entry here. Let us make the entry. Friends, you can notice our last entry capital reduction account debit to PN account and to capital reserve. Being surplus of scheme used to write off debit balance of PN account and remaining balance transferred to the capital reserve. In this way, we have completed our journal entries. Importantly, now I have to prepare a balance sheet. While preparing the balance sheet, we have to keep in the mind our existing shares are surrendered to the extent of 50%, right? And thereafter surrendered shares are reissued also. I have to decide how many shares will appear in our balance sheet, for which I will be preparing a small working note. Friends, you can notice I am ready with my working. Existing equity shares were 10,000 which were converted into 1 lakh shares. Out of those, 50,000 were surrendered and 3,600 were reissued. They were reissued to trade payable and they were reissued as equity shares. In that way, number of equity shares in balance sheet will be 53,600 of rupees 10 each. Similarly, preference shares we have issued to debenture holder out of surrendered shares 10,000. Importantly, these two we have issued in settlement of liabilities out of surrendered shares. Rather, existing shares are converted into new equity shares of 10 each. In that way, this entire capital is created because of your reconstruction scheme. We can put it as a note or we can ignore that. We can even write it as a footnote to the balance sheet. This will appear in your balance sheet. I think there is no further working note required. We will prepare the balance sheet. Friends, you can notice I have prepared a balance sheet of revised, limited and reduced as on 31st March 20x1. Normal format is there. Equity and liabilities shareholders fund include A share capital, for which I will definitely prepare a note, and wherever there are only one items I have mentioned in the bracket. Reserves and surplus include only capital reserve which is created at the last entry, you know that. Number 2, non-current liabilities. A, long-term borrowing. This include only one item, 12% debentures. Unsettled amount of 50,000 will appear here. How that amount is there? Originally it was 2 lakhs. Of that, 1,50,000 was cancelled. Current liabilities include other current liabilities which is accrued interest on debenture. Originally 24,000, of that 18,000 they have cancelled, so remaining amount of 6,000 will come in your balance sheet. Short-term provision include tax provision which was originally there 24,000. Asset side include number 1 non-current assets. In that there is a fixed asset. Under fixed asset, tangible fixed asset, we have only one item, machinery, which is recorded 1 lakh. Let us see the next. Number 2, we have a current assets. In that existing assets, I have recorded inventories, trade receivable and bank. As it is, they are copied. We have to prepare a note only for one item, that is share capital. Let us prepare the note. Friends, you can notice I have prepared a note forming the part of balance sheet which include only one note, share capital. In that authorized capital we don't know, so put a question mark. Issued, subscribed and paid up 53,600 equity shares of 10 each, 5,36,000, 10,000 12% preference shares of 10 each, 1 lakh. Note, all the above shares were issued under reconstruction scheme. This we have just mentioned as a disclosure part. Total is 636,000. This will be placed in your balance sheet and hopefully your balance sheet will tally. Friends, you can notice I have written the share capital 636,000 and my balance sheet tallies at 7,20,000 at both the sides. Right? I just hope you have understood this solution. Still, if you have any doubts, please put in the comment box. I will try to reply to your queries at earliest. Thank you for watching the video, and before I close the video, I request you to share this video with your friends for their benefits. Also, please subscribe and like our channel Ekeeda. Thank you for watching the video, students. God bless you.